Gene, I know you love Tesla, but what is not being priced into the stock with the stock north of $1,000 right now?
The sustainability of what's happened, I think, BK, you said fundamentals don't matter. I think fundamentals matter very much. I understand your point, but I think that the sustainability of the fundamentals, the strength of fundamentals is what's not being priced in. And I step back and say, don't know what the stock's going to do over the next 6 months. Hard to predict that. But if you just look at the trajectory and think about what the value of Hertz, I appreciate your comments, Melissa, about getting these cars in consumers' hands, and then they buy them, they experience it, they buy it. But I think that sustainability is not reflected. I want to just quick put some numbers around that. Their current share in the U.S. is around 65%. Globally, it's less. And I've always thought that they're going to gravitate to 20% share eventually, 10 years from now, of the car market. And that's more than any car maker has today, but it's a far cry from 65. What you see these screws getting turned down with the Hertz announcement, I think that this number could be more than 20%. That would imply about 17 million vehicles a year. They're at 1 million today. So I think that this conversation we're having, we're going to keep having it. And the stock is going to be down some quarters, more quarters it's going to be up. And we're going to wonder when it's going to end. So I want to try to fast forward to the end of where I think that this plays out. Is if you look at, they're going to do $70 billion next year in revenue. I think by 2027, a long time from now, they'll do $400 billion. You put a 6.5 revenue multiple, hardware, software, services, you get to 2,500. That's a big jump from where we're at today. But I think we're just going to keep chopping our way up. Could be wrong. Competition could catch me, surprise me. But I think this is one that just has really a decade of a tailwind to it that is, even at these valuations, can create value for investors.
Hey, Gene, Tim, so I can't argue with that. And I kind of agree with at least some part of your top line growth. But this is not really a tech company then. It's back to the auto company argument. And at least if you look at the operating margin for producing this car, it doesn't warrant, even at the type of growth you're talking about, even north of 20% market share, and I think the competitive landscape. So please push back on that because you've been steadfast here, you've been right, and I'm having trouble looking at the valuation.
So the car, everything I outlined is correct. We're talking about cars, and then in a sentence later I'll say it's more than a car company. I'm take more of a philosophical approach to this and say, whether it is in the form of a car or it's in the form of a phone or it's in the form of some sort of advertising revenue, I'm trying to focus in on which products can have the highest sustainable growth and what are their profitability characteristics. And so I think that, eventually over time, more than half of Tesla's revenue is going to be car related. It's 100% basically right now. But I see this as just kind of looking at the core. Can they get to 40% gross margin? It was called 30% last quarter. Can they get to 40%? And if they keep growing at 50%, do people even really care whether it's called a car company or a phone company? They just want earnings power. And I think that absent some surprises in competition, they're going to keep delivering it.
Hey, Gene, it's BK. So let me ask you, just put a $2,500, I mean, roughly, you didn't put a price target on it, but you said if you put a 6 multiple on it, you can get the $2,500. I happen to think maybe that probably gets there sooner than we think. Let's say it gets there within the next quarter or two, which I think is a possibility. Do you then sell it, and then does that turn you bearish?
Yeah, I think I would sell it if it got to 2,500 in let's say a month. That's just too much, too fast. You could argue that at where it's at today, but there has to be some sort of a framework around this. And what I'm talking about is 2017. I'm talking about like a 3-5 year price target to double. That would be a great return under typical investment. But if we got there in a short amount of time, I do. So I think that I would stick to the discipline and think about how much is getting priced in, and that would be too far, too fast for me, and I would be selling at 2,500.
All right, Gene, great to speak with you. Always good to get your insights, especially on Tesla. Gene Munster of Loop. Brian Kelly, you got to go back to you because I feel like we're going to rewind and play this appearance. You think 2,500 could be actually in the next couple of quarters, and yet you want to clean out your drawer? I'd keep that sucker in the drawer. If you, if you really thought it was going to go that high in a couple of quarters, why not keep it in that drawer?
So, fair point. I have not explained my drawer policy well at all this evening. So let me explain it. I have taken the shares out of the drawer. I am not selling it. But I think in the next quarter or two, it would not surprise me if it doubles, and then I would be selling it with both hands.
That is quite a call. Steve Grasso, could you be on board?
Oh, well, I mean, if it gets to 2,500 in that ludicrous speed, basically, then you would have to sell it. But when what Gene didn't mention, but he mentioned the other night, was the full self-drive software subscriptions, and that's between $7,000 and $10,000. That's another huge tailwind for the company. Energy storage, battery, it's a very small percentage of overall revenue now. Mm-hmm. It's ticking up, so it almost reminds me of Apple. And then you have the software and everything else and services on top of that with Apple. So I think, yes, I'm on board with Brian cleaning out his draws at 2,500, even though there's nothing in there right now. I think that the stock, what was the price target Kathy Wood had on it? 3,000? So, yeah, I think we're all on the same page. Velocity is key on how quick we get there.
All right. I shall end this block with a question for Tim Seymour. Which do we see first in Tesla, 500 or 2,500?
Oh, boy. Good one. Good would you rather. Look, I think ultimately 2,500 is probably where it can go. But, it's not in the next quarter or two. And the stock is way overbought. And the valuation makes less sense today than it did yesterday. I think the balance sheet of this company, their ability to get their production right, the fact that it's been profitable now for 3 quarters straight, makes it a lot harder for me to go for the 500 that I would have said, 3 months ago. So there's my answer.